Hi guys, this is Litefinance Global YouTube channel. It's my pleasure to be with you again. We already explained in details what the range bars chart looks like, so it's time today to provide the first trading strategy based on the range bars. So without further ado, let's jump straight into the video. Let's start with some disclaimer. If it's first time you are seeing the range bars, I strongly encourage you to do hundreds of examples before you are going to trade real money. At the very beginning, it might not be easy to adopt this type of the chart to yourself. It could be challenging, especially if you spend some time already with the time-based chart, right? But when you are going to be a little bit more familiar with the range bars, some things might be much easier here than on the time-based chart, and for some of you it could be even decision to switch from the time base into the range bar, especially that some things are better visible here. So that's the number one. The number two disclaimer is that it's not a holy grail, so meaning that we are going to face series of losses, right? The next point, very important, is that I strongly suggest if you are going to start to test the strategy, to follow the trend from the higher time frame, right? So for example, lately we've seen euro dollar going higher, so we are going to try to apply the strategy to buy the dips, all right? And we have the euro dollar over here, as you can see. So I'm going to explain the strategy based on the buying the dips, but also of course it's going to work opposite if we got the downtrend. So this strategy as a sell the rallies is going to be the name of the game. Another way you may want to trade this strategy is to trade immediately the break of some certain levels I'm going to explain. Well, as usual, please like, subscribe if you haven't already, leave the comments and questions below the video if you have any, and I'm going to try to answer. Well, overall, if we have moved to the upside from the bigger time frame, so what we are looking for on the range bar, all right, and depends on your setup. In my case, it's a 5 pips range bar. We are looking for some kind of the consolidation, all right? Then we are looking for move out of that consolidation with the conservative approach, and we are buying on the way back. But that's the straight, very easy approach. There are gonna be some details I'm going to tell you about. The second approach could be, if you are very aggressive and you are already familiar with the range bars, that after the consolidation, if you see the move higher, then you are immediately jumping into the bandwagon and trading straight, right? Trying to gain some pips. What I like from this type of the strategy based on the range bars, the things related to the stops are very straight. The stops are very, very tight. Very often no bigger than 12 pips, for example, right? Very often it might be even below 10 pips. So what is all about? So we know that from the bigger perspective, we have the rally on the euro dollar, especially with the break of the 112. So what we are looking for on the chart, we are looking for some kind of the consolidation with the upside break, and we are looking for the retest. So overall, here you go. That was the first consolidation, but it was below some intraday high. So in that case, for me, this one is not valid. So once we go through the resistance, that's what I was looking for, some kind of the opportunities. So let's draw few of them. So that's the first consolidation. That's the second consolidation, all right? And finally, we might treat this one as the third consolidation, but was a little bit too wide. And well, anyway, we are going to go through all of them. So I know that this is here the number one consolidation, number two, and number three. And the point is here that I'm trying to not trade the first one if I have two more unfilled before, all right? What does it mean? It means that this type of the move from here after the consolidation without retest of the lower consolidation, so the first pullback, there was an attempt to buy, right? So even if we were trading this one, most probably I wouldn't trade this one, but even if we would trade this one in the mid of that range, right, with the stop below of that range, we would be in that case stopped out. So what's the approach? I'm usually looking for the 50% of each range with the stop below, 50% of the range, all right, and stop below, 50% of the range with the stop below, right? So with the first trade, most probably I would be stopped out. Let's make some kind of the measure. That would be the entry, and the stop would be, as I mentioned, not even 10 pips. It would be something around 8 pips in that case. Let's make another trade here, and let's talk about this consolidation, all right? That would be even better because the stop here would be very, very tight, okay? So in that case, we would have something like 4-5 pips maybe stop, and trading this one, it could be, with this approach, it could be this as a first target. So in that case, we are talking about something around 16 pips, so already 3R, and retest of the high, in that case 35 pips, all right? Monster trade, okay? In that case, we have another consolidation over here, and 50% would be here. So that would be another positive trade. I wouldn't trade more, I would wait for another unfilled consolidation to be filled, especially if we are going to take into the consideration this long range ahead of the weekend. If we are going to double that range, ideally we are going to retest 50% of that move. Okay, of course it's going to be very, very similar when it comes to the trading to the downside, of course with opposite approach. I'm going to try to find something, it was only up, all right, but when we were below 110, there was a quite few trading opportunities, and in that case, for example, that would be the one of the possible trade over here, okay? Here would be possible trade with 50% approach. I'm not sure if I would be stopped out or no over here, but that's how it works. You are not chasing the prices if you are a conservative trader, all right? So that's the very important. With that being said, guys, wish you great next trading session. Do hundreds of examples before risking real money. See you around, take care, and goodbye.